The 600 crore deal is done. The money has come to Anand Piramal's company. But why was the entire stake sold? Imagine this. It is a completely normal day in the stock market. Prices are moving up and down on the screens, investors are checking their watch lists, and then suddenly an exchange filing arrives. It says that a major financial company has completed the deal to sell its entire stake. Regulatory approvals have been received, and 600 crore has already been received by the company. At first glance, this looks like just a corporate update. But the real question begins right here. If a company sells its entire stake in an insurance business, is this simply a move to raise cash? Is it a sign of a larger strategic shift? Or is there a deeper story behind it? One that shows how big business houses are now reshaping their empires in a new way. That is exactly what makes this news not just a transaction, but a bigger business signal. This is the story of Piramal Finance, the NBFC arm of the Piramal Group, whose executive chairman is Anand Piramal. Ordinary people often know Anand Piramal's name not only because of business headlines, but also because he is Isha Ambani's husband. But in the corporate world, a person's real identity is not built through personal relationships, but through capital allocation, restructuring, and strategic decisions. And that is exactly why this 600 crore deal of Piramal Finance is drawing special interest in business circles. Because the issue here is not limited to just the money has come in, but rather which business is being exited and which direction the company is moving toward. And that is far more important. In its filing to the stock exchanges, Piramal Finance said that its entire 14.72% stake in Shriram Life Insurance Company Limited, which it had announced for sale on the 19th of December 2025 to Sanlam Emerging Markets Mauritius Limited for 600 crore, has now been fully completed. The company confirmed on the 30th of March 2026 that it had received the consideration and also said that the necessary regulatory approvals had been obtained. Two very big signals are hidden in this one update. First, this is no longer a tentative or pending agreement, but a completed transaction. Second, the buyer is not an ordinary investor, but an established strategic player with insurance and emerging markets exposure. This shows that the exit was not executed in haste, but as a planned transaction. Now, if you look at this deal at the surface level, the headline seems straightforward. Stake sold, 600 crore received, matter closed. But in the corporate world, things are rarely that simple. Because whenever a listed financial company sells its stake, it does not mean just asset monetization, especially when that stake is in a sector like insurance. Insurance, lending, wealth, asset management. All of these are parts of the financial services ecosystem. So if an NBFC is exiting an insurance stake, then it is natural to ask whether the company wants to move out of non-core investments and focus more on its core lending business. Reporting by Economic Times and Money Control also points in the same direction. That through this sale, Piramal Finance wants to redeploy capital into its main lending business. And this is where the story becomes even more interesting. Because the Piramal Group itself has gone through a phase of transformation over the past few years. At one time, the group was seen as a mix of pharma, real estate, financial services, and diversified investments. But gradually, it began sharpening its capital allocation, simplifying different verticals, creating a merged structure, cleaning up the listed identity, and making the business narrative more focused. All of these steps have been part of that larger journey. After the merger of Piramal Enterprises and Piramal Finance in 2025, Piramal Finance emerged as a listed pure-play NBFC structure. In November 2025, its shares were listed on the NSE at 1,260, debuting at a premium to the discovered price. That meant the market was seeing it as a new chapter. Now understand this in simple language. When a company wants to build a clear identity in the market, it tries not to hold too many scattered investments. Because investors like clarity. If a company is in lending, then the investor wants to understand that its capital will mostly be used for lending growth, asset quality, profitability, and AUM expansion. But if the same structure also has insurance, random minority stakes, legacy investments, and passive holdings, then the valuation story can become muddled. That is why many groups, from time to time, sell non-core assets and make the balance sheet leaner. This is the same logic that seems visible in this move by Piramal Finance. Piramal Finance's stake in Shriram Life Insurance was being viewed more like a historical financial investment rather than a strategic business with operating control. That is why, even before 2025, signals had been coming from the Piramal side that the group was ready to monetize its financial investments in insurance businesses at the right time. In a public document from January 2025 as well, the group management broadly said that its stakes in Shriram insurance entities were financial investments, and that there had been an intention to exit them at the appropriate time. So this 600 crore deal did not emerge suddenly. Its roots were already present in earlier strategic thinking. But there is another angle here that is important to understand. Who is the buyer? Sanlam Emerging Markets Mauritius Limited. Sanlam Africa also issued an announcement regarding this transaction, saying that after the deal completion, Sanlam's effective holding in Shriram Life Insurance rose to around 48%. The direct meaning of this is that the buyer is not looking at this asset like a passive financial holding but as a deeper strategic position. In other words, what was a non-core or monetizable investment for the seller is an opportunity to deepen insurance presence for the buyer. That is the beauty of corporate markets. The same asset can be peripheral for one side and a strategic jewel for another. Now let us talk about the 600 crore, which shines the most in the headline. For any NBFC, fresh liquidity or cash inflow is not just a treasury event. In the lending business, capital works like oxygen. If you have more capital, you can fund growth, manage liabilities better, improve the leverage profile, or expand into high return segments. Piramal Finance has positioned itself as a housing finance, retail lending, and broader credit platform. In such a situation, an inflow of 600 crore, especially when it comes from a legacy holding, gives the company room for capital redeployment. That is why the market sees such deals not just as a sale, but also as strategic capital recycling. And this is where attention also turns to Anand Piramal's role. Headlines often present him only through family connections, but in the world of listed companies, any chairman or executive chairman builds credibility through capital decisions. Anand Piramal has long been associated with the group's real estate and financial services dimensions, and over the past few years, the direction in which the group has simplified its structures shows a clear leadership intent. This deal too seems to be part of that same intent. Focus where you can scale, exit where you are only a minority financial holder, and unlock capital where value can be reused more productively. This approach is both conservative and disciplined. Now let us talk about the broader market psychology that works behind such news. When a company realizes cash through a stake sale, investors focus on two things. First, did it get a good valuation? Second, what will be the next use of this cash? If the market feels that the company sold a good asset at a sensible price and that the money will be deployed into the core business for better returns, then it can be a positive signal. But if the sale was done out of compulsion, or if the use of the sale proceeds is unclear, then the market may also react in a mixed way. In this case, the reporting suggests that Piramal Finance is viewing this exit as part of a broader strategic focus, so it is difficult to call it a distressed sale. Still, one more question naturally arises in the mind of the ordinary viewer. Does this mean there is no value left in the insurance business anymore? Absolutely not. The real point is that not every financial services company needs to be present in every segment itself. Some companies focus on lending, some on insurance, some on asset management, and some try to become universal financial supermarkets. But the benefit of a focused model is that both management bandwidth and capital move in a much clearer direction. Piramal Finance perhaps is now signaling exactly this, that its future story is lending-led, not minority insurance holdings-led. And in corporate strategy, clarity is often more valuable than diversification. Another interesting aspect of this story is that the Shriram ecosystem itself has long been a big name in the world of financial services. Insurance, lending, transport finance, retail finance. The Shriram brand has had a strong presence in India's financial landscape for a long time. In such an ecosystem, a stake sale does not mean just a transfer of ownership, but also a change in ecosystem alignment. Sanlam has its own insurance background, so its increased stake in Shriram Life also shows strategic coherence. In other words, there is logic on both the buyer and seller sides. The seller wants capital discipline, the buyer wants strategic deepening. That is why this transaction is far more layered than the headline suggests. Now let us also talk about the listing angle, because for many viewers, this is the most practical part. Piramal Finance made its market debut in November 2025 when after the merger of Piramal Enterprises, it emerged as a new listed entity. According to Money Control's reporting, its shares were listed on the NSE at 1,260, which was about a 12% premium to the discovered price. That means market excitement was clearly visible at the beginning. This also shows that the market wanted to see this company not just through a legacy identity, but as a new focused financial platform. In such a case, news like the Shriram Life stake sale can make that new identity even sharper. But a business story does not run on premium listing alone. The real story is built through execution. Now investors will watch how the realized rupee 600 crore is used. Will it strengthen the lending book? Will there be more emphasis on retail growth? Will profitability metrics improve? Will the story of asset quality and capital efficiency become stronger? For listed NBFC, these are the real tests. A stake sale headline can create one day of excitement, but only the numbers of the next several quarters will show how well management used this monetization. That is why, as important as this deal is, its post-deal deployment phase will be even more important. And this is exactly where understanding the news only through a headline like Anand Piramal got the money becomes incomplete. Technically, the money has gone to the company, not to any individual personally. This distinction is very important. In a listed company, sale proceeds go into the company's balance sheet, not into a personal account. Yes, Anand Piramal is the executive chairman of the company, so his name in the headline draws attention. But the corporate reality is that this is a strategic transaction of Piramal Finance. When we look at business stories through the lens of personalities, the drama increases. But when we look through the lens of the balance sheet, the real meaning becomes clear. So the essence of this entire news is not that a businessman from a big business family got 600 crore. The real essence is that a listed NBFC monetized a legacy minority investment, closed the transaction after obtaining regulatory approvals, and now has the opportunity to redeploy capital into its core financial business. That is corporate discipline. And that is exactly the difference between a headline and business reality. A headline sells emotion, a filing shows strategy. If we look at this story a little more deeply, it also reflects a larger trend in corporate India today. Conglomerates and diversified groups are moving not toward blind diversification, but toward sharper focus. The market too is increasingly favoring companies that clearly define their strongest business engine. This stake sale by Piramal Finance can become an example of that broader trend. Because the message here is clear. It is not necessary to hold on to every asset. Selling the right asset at the right time to fund future growth can be just a smarter decision. And perhaps that is why this 600 crore deal is bigger than the headline. It has cash, a regulatory story, an insurance angle, an NBFC strategy, post-listing identity sharpening, and a leadership signal too. Deals like this tell the market that management is not just running the business, but actively sculpting the portfolio as well. In other words, the company is not passive with its assets, it is deliberate. In the end, the point is very simple. Big companies do not become big only by earning money. They become big through the art of deciding where capital should be deployed and where it should be withdrawn from. This deal by Piramal Finance is one example of that art. By selling its entire stake in Shriram Life Insurance and securing 600 crore, the company has not just made an exit, but perhaps taken a step as part of a larger strategy in which it wants to concentrate its energy and capital exactly where it sees the greatest possibility for its next chapter of growth. And in the corporate world, many times real strength is not seen in buying something new, but in selling an old stake at the right time. That is the biggest lesson of this story. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.